Okay, so having told you a little bit this story and setting the scene, I would like to get to the panel discussion and just put this away for a minute. And actually, the first thing I would like to do is that people would present themselves. That would be handy, I think, for the audience. So, Matthieu, maybe you can start.
So I'm Matthieu. I represent Circeo, company that we founded and that I lead today. We have a platform, end-to-end platform, that serves the lending space. So in the lending value chain, we are from the beginning until the end. We are mainly incorporated in Luxembourg. We have our activity today in France and in Hungary.
Thank you.
Great. Yeah, Oliver Harris. I head up FinTech and our in-residence program at JP Morgan. What does that mean? I look after our innovation strategy for our functions and lines of businesses, help connect with the ecosystem, whether it's VCs, startups, universities, and through in-residence actually think through how do we generate tangible outcomes through partnerships with those institutions.
Hello everyone, good morning. My name is Richard Kelsey. I work for Backbase. Backbase is a software company. We're a enterprise presentation tier or customer experience layer that sits on top of a bank's core systems to help a bank to unify their silos and repurpose the legacy systems to compete in the digital first world and accelerate their digital projects.
I'm David Galbraith from Anthemis. Anthemis is a venture capital firm that just specializes in financial services. I had no financial services background before I joined Anthemis, and I wasn't a VC. So what I do is help with building companies now as well as investing in them. So I do the early stage stuff.
Thank you. Good morning, everybody. My name is Remco. My role in Atos is Group CDO, Chief Digital Officer. I'm heading a team of industry directors in financial services. Most of them are sitting at the table, so please meet them as well. I'm also responsible for the FinTech engagement program, and looking forward to this panel discussion and meeting you today. Have fun.
Thank you, gentlemen. So, well, to start, I told a story about labs, representative or not, but certainly what would be a nice thing to do is to just have an exchange of thoughts about what do you think a lab would be, or what do you think a lab is, in your opinion, in this context?
I'm happy to take the first one. Actually, we don't believe in labs. So in terms of, I was going to throw this out, I was waiting, is when we think about innovation at JP, we actually think through like how do you innovate from the core? And for us, it's all about bringing together the right groups within JP Morgan, all the different functions, and actually enabling our own employees to innovate in their businesses. And I liked, the beginning when you said the future is happening now. And I think from our perspective, it's very difficult to actually set up separate units and then innovate and create, potentially shiny objects and then try and translate them into our core company. So I think when we think about innovation, what we've done is two things. One, we have created dedicated teams that fill talent gaps, whether that's engineering, data scientists, for example, on specific technologies, blockchain, cloud, robotic process automation, etc. And then enabling teams like mine, which are more horizontal, whether that's, on innovation strategy, connecting with the ecosystem, connecting with our clients. So I think my first point is, you don't necessarily need a lab, and you need to think through, what outcomes are you generating, whether it's clients, employees, or shareholders. And it depends on your specific company culture and the skills you have in terms of the right method. So you might not need a lab.
So, including the option of no lab, of course, I've seen I suppose a lab take three potential forms, depending also on how you define FinTech as well, really. One would be literally an incubator idea where the bank is perhaps partnering with a fintech, maybe even invested in it or part or fully owners in that fintech, and either to incorporate that technology into their main providing or frankly just to flip it at some point. They're incubating that fintech. The other one is also the collaboration with the software company or with the fintech in a sort of protected, sealed environment, which is kind of sometimes can be the wrong way to do it before it's then launched into the main banking proposition. And then third and finally, of course, is a lab to literally create perhaps a new digital bank, which is a much more bigger picture strategy decision rather than trying to incorporate fintech and as much change as possible into the main banking lines. Obviously, plenty of businesses are just saying, you know what, we'll start again with a new digital forward business line, and that can grow out of a lab.
David, any views on one?
Yeah, I mean, I think labs, I mean, the word lab comes from Bell Labs and Xerox PARC and places like that, and labs today don't have anything to do with that. They're not about science, really. So I think now they're solving for the first wave of fintech was just an industry upgrade to the digital era. That's kind of a cultural thing and a sort of product thing. But I think actually this second wave of fintech might actually be a bit more innovative and genuinely revolve around. It so happens that financial services sits at the intersection between very deterministic systems that blockchain and smart contracts probably is quite important with, and then risk, where AI and statistical methods are very important. So it just happens to be a perfect intersection of two areas of genuine innovation. So I think labs actually might become real again.
Remco, anything to share on?
Yeah, so wide view on what is a lab, and maybe a lab is not a physical room necessarily like we're in here today, but it's more adhering to a process where you embed and work with several stakeholders in the organization, and I agree with all of you there. It's a mechanism where you're looking outside in on what do you want to change in your organization. For me, it doesn't matter whether it's a physical room or not. What's important is what it's impacting. Yeah. So, how does it drive change for your consumer, different segments in the market, etc. Where do you want to be with your strategy? And taking it from there, how does it affect the journey that the customer is making into your organization and how you serve them better? And also taking into consideration what competition is doing, and then test driving different technologies on how that's going to step change your situation. And how that's done, if that's in a lab, yeah, it's a mechanism, or it's an instrument. But for sure, you need to get the full value chain.
Yeah, so much more integration into the full change to generate that value. That's what I hear in what you're saying.
Thank you. Yeah.
Based on what Oliver was done.
For us, it's I'm just like you. I'm not a believer, but I have to practice. And we are so innovative and disruptive that when we go to customers, potential customers, they think we are piloting a Star Trek shuttle, and the lab is where we land the shuttle, and where we can demo, we can do some POC, proof of concept, that what we're doing is a reality. It exists. It's tangible. The value proposition is not an illusion. It's a reality, and that's how we use the lab to be able to show in a tangible way that what we're doing is reality, not just a dream.
Yeah. Okay.
There was a time when it was a dream, but now it's over. It's a reality.
Well, actually, what I want to do, we had a fifth hypothesis I had on one of the themes you're touching, because when you're talking about getting into the financial institution and explaining, it's like, oh, what are they talking about? It's that far away from what we do today, so it's really innovation or disruptive. And one of the things I want to catch home is the difference between the culture, between, as they say, the culture of the financial institution on the one hand and the culture of the fintech. Can you share insight? Because I think that's one of the crucial things on is this true, is it not true, is it in some areas true, between really to bridge these different cultures to get to that result of end value that we're looking for. Any ideas on how we could evolve in that? Because that's my experience too, what Matthieu is saying. So.
Well, I personally, that's my background. I'm a retail banker originally, and then I moved to software development, and that now we call in this new venture FinTech. So I'm in empathy with the bank. I've been a banker. I've been doing retail banking. I've been doing lending. Now the main difference between us FinTech and the bank is that the banks are always dreaming of the wonderful system that they've never seen, and on our side we have developed this amazing system that we've been dreaming of and that we've never seen, but now we have it, and that's I get back to my lab. That's where the lab is important, because we can show that yes, it's a reality, and banks also think always of small pieces of functionalities that they could have seen or heard about, and we help them to see the whole picture. That's also something that is important.
Is this something you share, Oliver, or how could you help the FinTech to do that in another way?
And I think, just more broadly, if you have like large institutions, incumbent banks, and the early stage FinTechs, I think it's like, why should we collaborate and talk with each other? Just setting the context before I answer the culture question. I think there's a variety of reasons. I think one is sharing knowledge. Two is a bit of competitive intelligence on both sides in terms of learning about each other. The third is actually using their products as vendors, especially on the wholesale banking side. We see it's a lot about collaboration and co-creation, and when we put a lot of thought into this, we're thinking through like, what are the pain points that we struggle and face as a bank working with early stage companies? And I think we're great at building things like internally. We're great at buying companies and integrating them, and we're good at partnering with large vendors. I think all banks, and actually probably all corporates in most industries, struggle to work with early stage companies, and the reason for that is process and culture, and that's where we spent a lot of time and created this in residence program, because if you especially on the Series A and below, if you have 10, 20 people trying to work with, just in our corporate investment bank, we have 60,000 people. Like the scale is off the chart. And we struggle with legal, risk, procurement, who's the right decision maker, who actually is going to buy the product as a vendor, navigating the company. So what we've done is created a neutral team, sits in strategy. We help triage the FinTechs to work on the right problems, and then meet the right decision makers, and have a very clear process to go from, first meeting, vetting, proof of concept, incubation if needed, and production, and trying to overcome those cultural barriers, because we typically, and it's about expectation setting, both with our employees within the firm, but also with the startups. And if you don't set expectations from day one, and if you don't have a clear outcome, like why are we having this conversation, then I think you'll fail, and you'll just end up having pointless coffee meetings or endless bureaucracy meetings, which we don't want. So I think the very clear thing for us is set expectations. We have a neutral team, so in theory, if we're doing our job well, we can talk both languages, and then have a very clear path to production. And then along that journey, if it's not working out, then fail fast, genuinely, and then move on.
Yeah. Richard, from your point of view, did you see any kind of evolution in that from earlier days as startup to more mature, and your experience around that?
I'd say so. I mean, Backbase has been around now since 2003, so we're on certainly the latter stage of that maturity curve. But I'd say not just for our business, but also in general as an industry, although I'm not on the banking side, obviously on the tech side, I wouldn't necessarily throw banks under the bus and say they have the wrong culture and FinTech does everything right. I think realistically it's the case that you have two very different types of organizations in very different life cycles attempting to work together. So that's always going to bring up challenges, I think. I think it's important to remember that we're usually on the same side of the table and in one way or another trying to work toward the same goal. I'd say over the past few years, the trend is certainly moving in the right direction. I don't think we have a crisis where these cultures are too mismatched. I think they are converging. The main impact we're seeing of that is the amount of job roles and teams and divisions at banks that are specifically focused on digital transformation, innovation, etc. And some banks do this better than others. And I think the key question to ask yourselves, that's assuming you see that direction valuable, not necessarily saying that you should, but the question to ask yourselves is, are our transformation directors or our head of digital, do they actually have real decision-making power to sort of take the business in the direction that they believe is right? Or is it just a box-ticking exercise to say, yes, we have a person with that title? Yeah. That's the kind of difference that I see in banks that are moving toward that really well and banks that are maybe a little bit behind, is that they just have the right job titles, but it doesn't really mean anything.
Yeah. David, anything to share?
Yeah, I mean, I think it's a very different industry from other. It's regulated and it requires large balance sheets, and those two things mean that there has to be some relationship between the small companies and the incumbents. Mm-hmm. But it also means that the incumbents actually that are often the most boring and the biggest are actually the ones that are in the safest position. Like particularly in insurance, where the reinsurers can go straight to a startup and cut out the primary carriers altogether. So I think you're seeing that kind of relationship between someone with a giant balance sheet, a wholesale business, and a new business, and the middle gets hollowed out.
Yeah. What do you think, Remco? System integrators can be helpful there. What is our role in this kind of settings?
Now, first of all, these two parties need to meet each other, right? And there's cultural differences, but I see also there's a transformation and different view on the bank or insurer side, for that matter. I don't think it's just a matter of bringing in the technology. It's also shifting and looking at the operating model of the bank or insurer itself. Where do you want to be, and how that technology can really facilitate in there. And what you see is a couple of things. I think the most important here is to say that also the existing IT department that has been developing in-house for a long time period is kind of a threat to be approached by all these FinTechs that they have to work with, and it triggers them. They probably think we can do this ourselves, but they don't have the heartbeat. They don't have the DNA to bring that to the table that quickly, and the power behind it, and also maybe politics or budget or whatever kind of reasons it's not helping. So that is one side of the equation. The other side is very much related to just bringing a FinTech into the value chain is not enough, right? If you look at the GAFAs, the Googles, the Facebooks, etc., they have algorithms at board level and thinking. So the whole starting point of the transformation is different. That means also that if you look at working with FinTechs, you need to change the culture of the organization. You need to set teams together, like you were saying, Oliver. Maybe DevOps, Agile, putting teams together, working towards sprints of 2-3 weeks where you show tangible results, which is very different from what banks and insurers used to do. I've seen projects where we were doing blueprints of 6-7 months, and then we were doing construction phases of 2 years. That's just out of the question at the moment. We need to see that really cycle very fast, and it needs to have impact on what it means for the end customer of your bank and insurer. Because in the end, that's what they are asking for. And if your mobile app is not showing the functions that the customer wants, that is a reason for them to leave your bank. And remember, we have PSD2 coming up next year, open banking. We will see 90s kids coming with a mobile app doing exactly what they want it to do. And they don't need to be a bank for that.
Yep. Yeah, thank you. Well, on another angle, and David, you already touched about it when I was introducing the over-complexity or complexity that sometimes FinTech don't see, because there are a lot of things around about the risk and risk control regulations. I was wondering, from a regulatory point of view, I think there are also a lot of stretch right now. It's a complex, even more complex environment we're getting in. Do you see them as being champions or more impediments in this story? Because I think that's a kernel of the discussion, and that's sometimes where the hurdle are. Any more insight in that? On the fact that would they be a champion as regulators for kind of FinTechs and helping to get them out of the lab or into more value?
I mean, certainly we're seeing seismic changes with regulation. Part of those regulations that are going to affect financial services are the regulations against GAFA. I think GDPR, the whole approach to data and who owns it is actually being driven outside of financial services, but it's going to have a massive impact on it.
Yeah. And I think you see, at least for us, very interesting. I think you see the Bank of England creating their own accelerator. Obviously, there's the FCA Innovate project and their Sandbox initiative, which we've been party to on a few tests with FinTechs, and you're definitely seeing the regulators as well being like very proactive in this space in terms of how do we convene the ecosystem, the different stakeholders, think through innovation in an appropriate way. And I think particularly the Sandbox for us has been like a very interesting use case.
So it's actually not only culture in the financial industry, but also in the regulations and the whole ecosystem culture needs to evolve in that. Matthieu, any insight in that from you?
When we developed our tool, the Loan Factory, we took it as an objective, the compliance, and this is one of the disruption we are providing to the market, is that we are compliant by configuration, by essence. So for me, it's not a problem. It's a leverage to show the benefit of our product.
Yeah. And the regulators are with you on that, or how do you see it? What I mean, you don't care. Okay, that's an answer.
No,
any regulators in the room? Okay.
We've done an interesting exercise last year. We got a book on what does it mean to be compliant on the US market for retail lending. Okay, so it was 135 pages of very simple notions like giving authorization to the bank to receive marketing materials, and then there were some very much more complex features, and we just by configuration 2 weeks after we started, we were compliant. So I'm very concerned about compliance, because this is how I can leverage and how I can show how disruptive and innovative we are. But in the execution of the compliance, I don't care.
Yeah, but maybe to say on that as well, that I think technology evolves faster than the legislation and compliance. You see that with the regulators. Sometimes they have trouble of keeping up what the technology can already do. And we see also, so I'm from Amsterdam, how Amsterdam is being disrupted like Berlin, Barcelona, by Airbnb. It's just changing our city, and the local governments, I would say, have been sleeping and only getting awake now to see that they need to change the policy, because otherwise it will be changed for good. And this is tough, because the FinTech is evolving, and it's an interesting view that you have on that. But the bank, at the same time, needs to still be compliant. So there is a tension here, right?
But I would say that, I mean, if you look at Airbnb or Uber, which they created the regulatory, or they seized the regulatory arbitrage opportunity, the opposite is happening. PSD2 is creating, the regulators are creating the disruption opportunity.
Yeah, I agree kind of with that view. I think that the regulators have decided whether it's championing FinTechs or championing perhaps the customers, either way they've decided they want to level the playing field. I think we have to be honest of the big challenge that does represent for established banks. I was on a panel specifically for open banking last week internally with a large bank, and the main topic was sometimes large banks can be lulled into a false sense of security, where as a result of PSD2 and what open banking is going to bring, we start to think, you know what, we can let some aggregators and some new kind of startups start to control the customer experience. That's fine, because people will still bank with us, because we have the security, we have the scale, we have the branding. But that can be a real issue, because especially a younger generation, millennial generations, if we're realistic, they care less about data security than perhaps last generation. So they might sign up for a mobile banking app because it looks cool and it's a great customer experience, and how secure it is, how stable that business is actually an afterthought. So I'd urge you not saying everyone does, but I've definitely had conversations where people do. I would certainly urge you not to just think that throwing away the customer experience isn't necessarily going to be a big deal, because that could be a really slippery slope.
Yeah.
You can't rely just on your brand and scale.
Yeah, and I think just building on those points, at least personally for me, I feel it's about regulating the business model, not the technology. And I think to David's point earlier is, the first wave, I think, is across most segments of financial services in terms of digital, mobile, etc., is complete. And I think what will get interesting now is when we look at business model innovation. And I think that we're still in very early days there across all segments in terms of transforming value chains, thinking through the client experience and new products and services. And for me personally, that's when A, it starts getting very interesting, and B, the role of the regulators there in terms of, ensuring that we're not preventing innovation. So it's about the client, the customer, and the value chain, and regulating that, less about the technology. We should be technology agnostic. Yeah.
Yeah, so we see funneling back to the essence being the client, the consumer, and the regulators also, like with PSD2, enabling at that moment in time opportunities instead of just restricting. So there was a question about champion or impediments. But having said that, if you, as a last question before opening up on Q&A, but I think we're pretty much good on time. From that perspective, if you look between bank and fintechs, in the end it's about delivering that value to that client across this value chain. What would you say, and you could say from a bank perspective or a fintech to a bank or even VC, about delivering this value in a more efficient way? If you would think about a few elements, would you say, okay, today it's going to this, okay, we are transforming. If I could accelerate anything around that, what would be ideas to say, okay, if fintechs would do this, that's how we deliver faster and more efficient value or more value. The other way around, if you could ask, if the bank would open up this or that or do differently, that's where we could prove them we deliver more.
I think from our perspective, we think we're being client-centric. We want to create delightful product, and we're on a journey to have the JP Morgan wrapper. And whether that's product we've built internally, product with established vendors, or product with early-stage companies, we want to have a modular approach and deliver that in a seamless way to clients. So I think for me, it's a bit like digital marketing. Like, we don't use the word digital marketing anymore, it's just marketing. And I think the same will happen to FinTech. At the end, it's just product. And actually, I think the word will probably, 5 years down, hopefully sooner, should become obsolete. It's just different ways of delivering product to clients.
Okay. Matthieu, what would you say to Oliver to say, okay, change this so I'm more happy to deliver value to the end customer?
I think the big problem nowadays is that banks want to do everything in the same time, and well, who am I to judge? But I will.
Yeah, we did the presentation.
I'm French. People have to know that I'm French. So I have an opinion on everything, and I don't want to apologize for it. So banks want to do everything in the same time, and I think this is really not a good approach. And cherry pick 2 or 3 objectives that you can have. Let's do it, and then the rest will come much easier. That's
choose your battles. That's what.
I would say that. Don't struggle everywhere. Either you want to modify your customer's journey or your internal user's journey, or you want to improve you want to diversify your channels of distribution or the type of products that but don't try to do everything in the same time, because it's usually it doesn't work, and it's very expensive, and you don't see the benefit immediately. It takes too long to see the benefit, and it's not efficient. It's not efficient.
Yeah.
So just get the loan factory to replace the your value chain.
Okay, you're French, so stop it. David or anyone else? Any insight on that? You can advise both parties. Remco, from
so what I see with the FinTechs, of course, it's a journey to get on board, and I'm always deeply impressed how relatively small companies get to hook up with these huge, big banks. It's really tough, and they know how to get there. But I also see that they are sometimes stuck by compliance, stuck by procurement, stuck by any kind of hurdle within the bank. And I think it's about doing a test drive fast to see if the product is fit for purpose for the bank or insurer. What I also see from compliance reasons, sometimes to test drive things you need data, and preferably data from the bank itself. You can maybe manipulate data, but it needs to be near real data. If you avail this faster, then the test drive on the sandbox is going to be much more effective and efficient. You can make better decisions. And coming back to what Oliver said at the beginning, it's really crucial that all the departments are involved, also on the business side. If there's no ownership on that journey with the FinTech, it doesn't make a lot of sense, because in the end, the business, if they don't spend time with the FinTech to explore, to judge, etc., to make a decision, then they will never end up in the business. And we're wasting entrepreneurship on the FinTech side. And remember, their resources are scarce in terms of leadership, building the MVP, funding. It is a hell of a job to get them going. And please understand that from the FinTech perspective. Now, from the bank's perspective, I've given some food for thought as well. I think for Atos, we're here to help and to be the chief integrator of FinTechs. Remember that we are here to deal with the complexity of your legacy environments and to embed it, and also to de-risk, to work with FinTechs. And therefore, I think working with a company like Atos can be of added value to accelerate the process. And we think journeys, we think all the way to architecture, and also know that the technology of the FinTech, because we do the due diligence on the FinTech. Not only from a technology point of view, but also leadership, also from the product itself, funding, and if we believe in it, then we think it's a good relationship for the bank to work with.
I just say, I think FinTech has largely been a Chinese story. Like the Google of FinTechs happened, it's Ant Financial. It's FinTech started a long time ago with PayPal, and that's still probably the biggest FinTech. So it's not a new thing, and it's not really, and so clearly there's not going to be in developed countries the kind of opportunities there were in other sectors to create the large platform scale companies. So it's going to be a slow burn of lots of M&A probably.
Yeah. Okay. Thank you. Yeah, we can have, I would say, a 5 minutes Q&A. Anybody, any question for any panel member? Please shoot. We have very good coffee as a present for the first one. There we go.
Hi, Ian Ackley. Ian Ackley from NS&I. Just a quick question for all of it. You talked about having a neutral team.
Yep.
I was just intrigued by what's neutral about the team in strategy.
Yep. So, and I think this was going back to Remco's points around bias to build internally, and the fact that, so for us, we think through, how do we make money today? What's the value chain today? Overlaying that with technology, different vendors, ways of getting things done. And then we have our view of the future. If you want to partner with early stage companies, my team come in because we're neutral internally from a political perspective. So we report directly to the management team of JP Morgan, and we sit in the strategy function so that if we find a fintech to work on the right problem, we can help execute, because in certain instances there might be this bias from technology to build internally, or there might actually be a bias from product, whether it's sales and trading or our bankers. And where we come in is to make the right decision, for clients, employees, and shareholders. So that's what I meant by neutral. Is you at least for us, we're a team to bring everyone together internally, so that we have open debate and then co-emotional ownership on these products. And another point around, Remco, around actually the path to production is around being vested in these companies and having owners that, put budget and resource behind the partnership. Otherwise, why bother? Like, there's no point working with early stage companies. And that's something I think, at least we're very cognizant on, is we want to get these companies into production, or at least to vet them in a very structured way. So we don't use companies that we don't want to use, and we use companies that we do want to use, and we try and be very cognizant about resource constraint. So if we're not the right customer, or we're not the right, we don't have the right resources to deliver with the fintechs, then we'll say no, versus 50 meetings or ghosting them, never getting back to them, and they're like, oh, one day we'll get the call from JP Morgan. We'd rather say, I'm sorry, it's not right for us, but go talk to these people, or come back in 6 months if you've worked on this, or yes, it's great, this is how long it's going to take to get into production, and we'll help you on that journey.
I mean, it's a really good concept, and I'm intrigued to see how it works, because at some point it's obviously got to go back into the core business, and there's in a lot of organisations there is that threat of the kind of not invented here.
Yep.
So and in a sense, to be able to prove the effectiveness of a solution, you need some real-time data, you need some real sort of application, and therefore, the further you go down that track, the harder it is without engaging the core business.
So day one, we engage the core business. So day one, what we do is neutral person on my team, product manager, then we bring together a senior decision maker from the function, whether that's banker or compliance director, whoever is buying the product. Then we bring along their CTO, and from day one, we have this trinity of neutral person in my team, the delivery technologist, and then the owner. And because we have that trinity, we can actually bring the right people to vet those companies and then get them into production. So I think, again, historically, CTOs, you're incentivized to have a small number of vendors, everything's on-prem, you manage people. Now you manage relationships. It might be your own people, it might just be SLAs with large vendors or early stage vendors, and that's the cultural journey we're on.
Thanks for that. Any last question?
There's one question over here, Eddie.
Oh, okay, sorry, didn't see
I
it.
don't drink coffee, so I'm not so. So someone said to me recently, banks didn't innovate from the financial crisis. And what I was wondering is, like, you walk into a bank and you've a really crappy customer experience. How much of that is lack of innovation versus bad strategic decision making? So if I look at a big high street bank in the UK, you walk into a bank, it's typically a terrible experience, but you can go online and you can get a loan from them in 15 minutes. So, and it's in your account in 15 minutes, fully cleared for like multiple thousands of pounds. So how much of that is lack of innovation versus pure poor strategy execution? Not really
Yeah, it's a good question. I think at all times you need to be on top of customer experience. That is the interaction that you will have with your customer in the end. If that fails, it can put you out of business, and particularly what's going to happen after the 1st of January with open banking, there will be new entrants that are just doing that. So at all times, it starts with customer experience. And if you look at the GAFAs, this is where they start the process. They start with journeys, they start with personas, and then see how you can get step change the onboarding process where Dan was referring to in the beginning, or the loans process that you were referring in this case. Because maybe 15 minutes already too long compared to what competition is going to do, right? So at all times you need to continuously see how you can improve that process. If that is not part of your strategy, you fail. It needs to work together, because in the end you want to go after a certain segment in the market, and that's what you, for instance, see in the US, which is very dominated by FinTechs in the lending space, and there the FinTechs are going after specific segments that are underserved, but in the States a huge market, right? So yeah, you need to be good at both strategy and your customer experience.
Any views, David?
No, I agree. I mean, that's not innovation, that's just design and product building. And that's why I'm saying that's that first phase of just, it's an industry upgrade. Yeah. But there is some genuine structural change as well.
I would say, if I understood your question correctly, I think that for me that's a strategy thing, because the investment has obviously been applied into the online and digital channels. Does that mean there's a crossover period where the branch isn't the best customer experience? Yes, that's not, depending on the type of bank you are, that's not necessarily a bad thing, because I'm very surprised if I speak with a bank and they're investing in branches. Obviously it's the opposite way around, and there's loads of downsides to that, but that's of course an industry shift. So the strategy has been to focus on the web and the mobile channels. And I think many times banks also get a bit of an unfair bashing for stuff like that. I mean, I think if you look at any very established, highly regulated industry and the very large organizations within that industry, it's not like they're leading the world in innovation. I think it's just a case of regulation, and very large companies, you know, are perhaps one or two steps behind a small, nimble, you know, Facebook of the future startup. I think that's just realistic. I don't think it's banks specifically that have a problem. It's just a case of any large, highly regulated corporation probably isn't going to be the number one innovative player in the space. But yeah, I think it's a strategy, obviously.
Okay. Thank you, gentlemen. I would like to have a round of applause for our panel. Thank you very much.